Ladies and gentlemen, welcome to this month's review of China's Carbon Trading Market Program. This is International School of Low Carbon Studies in Shandong University of Finance and Economics. I'm Jiang Mingbing, the host of this program. Let's take a look at this month's carbon market trend. This month, the carbon quota prices in the Chinese carbon market initiated a downward trajectory, showing a continuous decline with a cumulative plunge of 9.74%. The market concluded with prices settling at 70.45 yuan per ton, aiming today below 70 yuan per ton. Simultaneously, the cumulative trading volume of carbon quotas began contracting, reverting to 40 million tons, with a specific amount of 40.4323 million tons. As of November 30th, 2023, the Chinese carbon market had 577 trading days with a cumulative trading volume of about 423 million tons, a total turnover of 23.566 billion yuan, and an average trading price of 55.69 yuan per ton. For the current month, the average trading price surged to 71.79 yuan per ton, representing a 4.02% increase from the previous month. Meanwhile, the trading volume reached 40.4323 million tons, down 56.55% month-on-month. Examining the overall carbon price change trend within the month, based on the closing price of carbon quotas, it is evident that prices continued to decline, ultimately closing at 70.45 yuan per ton, a 9.74% plunge within the month. The values approached the 70 yuan per ton threshold, as depicted in Figure 1. This pricing data corroborates the observation from last month's review that the real demand for carbon quotas in the current market is beginning to shrink, and the performance motivation of enterprises is weakening. Under these conditions, sustaining a high carbon price becomes challenging. Therefore, current attention should be focused on market price risk. Analyzing the price trends of various carbon quotas throughout the month reveals that carbon quota 19 to 20 experienced the most significant price fluctuations, as shown in Figure 2, while the price movement of carbon quota 22 remained relatively stable. However, as previously mentioned, although short-term differences exist among the three types of carbon prices, they tend to converge in the medium and long term, exhibiting an overall downward trend. Examining the trading volume of carbon quotas in the Chinese carbon market and three types of carbon quota trading volume, carbon quota 22 emerged as the primary focus of market trading this month. The cumulative trading volume for the entire market this month significantly decreased compared to the previous month, reverting to approximately 40 million tons. Specifically, the total trading volume amounted to 40.4323 million tons, with approximately 30.6382 million tons of carbon quotas traded through bulk agreement transactions, as illustrated in Figures 3 and 4. This decline in market trading volume underscores a weakened support for carbon prices, reinforcing the earlier observation. In summary, the prevailing characteristics of emphasizing performance and overlooking transactions persist in the current stage of the Chinese carbon market. The fluctuations in China's carbon market in November 2023 have slowed down. There were no transactions in the Tianjin carbon market this month, and the trading volume in the Shenzhen carbon market is less than 500 tons. Due to the small sample size of data, they are excluded from this month's evaluation indicator system. The composite scores for the national, the Beijing carbon markets did not continue the rising trend of the previous 2 months, showing a significant decline, dropping from 0.706 and 0.492 respectively to 0.555 and 0.406. The composite scores of the other carbon markets have all risen compared to the previous month. The Fujian carbon market saw the largest increase, with its composite score rising from 0.381 to 0.472. From the perspective of market size, in November, although the transaction and trading volume of the national carbon market decreased compared to October, dropping from 93.05 million tons and 6.42 billion yuan to 40.43 million tons and 2.34 billion yuan, returning to the levels of September. The transaction and trading volume of the national carbon market was still significantly higher than those of the pilot carbon markets, with a notably higher market size score. Compared to the national carbon market, although most pilot carbon markets, excluding Beijing, exhibited a clear upward trend in transaction and trading volume, the gap with the national carbon market remains substantial. In terms of market structure, the Shanghai, national, and the Fujian carbon markets accounted for a significant proportion of the total transaction volume over the past 12 months, reaching 32.21%, 18.97%, and 18.58% respectively, resulting in notably higher scores in market structure. In contrast, the Guangdong, Hubei, and the Beijing carbon markets had a smaller proportion of the transaction volume over the same period, accounting for only 6.58%, 5.02%, and 3.37% respectively, leading to significantly lower scores in market structure. In terms of market value, although the average transaction price of the Beijing carbon market decreased from the previous month, it still remained at 105.30 yuan per ton, significantly surpassing other carbon markets. The average transaction price of the national carbon market continued to rise from 69.01 yuan per ton to 71.79 yuan per ton, maintaining its position as the second highest. The average transaction price in the Shanghai carbon market also increased, reaching 71.74 yuan per ton. In contrast, the average transaction price in the Guangdong carbon market continued to decline from 66.70 yuan per ton to 64.25 yuan per ton. Their market value scored 0.734, 0.563, 0.562, and 0.502 respectively. Regarding market activity, the national, Guangdong, and the Hubei carbon markets exhibited a 100% ratio of effective trading days, significantly higher than other carbon markets. The turnover rate of Fujian carbon market reached 2.39%, distinctly surpassing other carbon markets. Consequently, the Fujian, Hubei, national, and the Guangdong carbon markets scored higher in market activity, with respective scores of 0.730, 0.702, 0.560, and 0.502. From the perspective of market volatility, the national and the Hubei carbon markets exhibited more dispersed transaction volumes with the lowest concentration of trades, merely at 0.71 and 0.98 respectively. The Guangdong carbon market experienced smaller price fluctuations, maintaining relatively stable prices, with a volatility rate of only 0.97%. Consequently, the Hubei, Guangdong, and national carbon markets scored higher in market volatility, achieving respective scores of 0.881, 0.861, and 0.850. Well, that's all for this month. Thanks for watching and see you next time.